Hello and welcome. Are we about to see one of the biggest changes in our economy for many, many years? Or is it all hype and no substance? What's the big deal about those three letters, GST, the Goods and Services Tax? Sounds a bit boring, but let me tell you, it's not. It's going to change our lives in many ways. So will we have to pay more or will we have to pay less when we buy things after the GST comes in? Will things become more expensive? Will they be cheaper? What is GST anyway? And why do economists believe that India must have GST now if we're going to grow faster and improve the way our entire economy works? Well, GST is big news right now. You've seen the scenes from Parliament. Actually, you don't want to see those scenes from Parliament. Don't watch television during the day. And the huge effort that everyone is making to put aside other differences just for a moment and at least pass the GST. I would say, for God's sake, pass the GST. The country needs it. It's also in the news because the Chief Economic Adviser of India has just come out with a comprehensive report on GST, what the plans are, what it's going to do, its intricacies, and a good summary up front for those who don't want to do too much bedtime reading. So this report adds a huge amount to the transparency and the goals of GST. And we have the author of the report with us here right now, Arvind Subramanian. Thank you so much for joining us. There's also, I must say, an elephant in the room, which we will come to later. But first I've got to ask you, you write in the report that 160 countries have implemented the equivalent of GST or something like that. How ambitious is it for India and how different is it from these other 160 countries?
Yeah, in my view, the Indian GST is going to be quite special and uniquely ambitious in many ways. So 160 countries have a VAT, what's called a value-added tax, which is what a GST is. Right. But implementing this in large federal systems is really the real complication. Right. And because the problem is that when you have a federal system, you have a central authority that wants to levy the tax. You want regional authorities.
The central government, the state governments, everyone
wants to do this. And then
I don't envy you. Yeah.
Exactly. And then in this, so everyone wants autonomy to set these rates. Right. But then if everyone does what he or she wants at the different levels, you get all these distortions, movement of goods becomes very difficult. Right. So to get a system, a clean system in a large country like India, where you reconcile all these different objectives, is actually very difficult. And what India is planning will make it actually, in my view, the 21st century standard for how to do these things in a large federal system.
That is phenomenal, actually. Yeah. We've heard about the benefits of the common market in Europe. To some extent, this is a step in a common market,
absolutely, right? Very much a step in one market. Yeah, absolutely. Because, there are lots of taxes affecting the movement of goods between states.
Right.
And the GST will, if the GST gets done, we'll eliminate most of those and we'll clean up many of them so that, many taxes are rolled into just one tax.
I mean, currently, it is a mess, right? Yeah. It's a mess. Yeah. And to change a mess with a messy social structure, messy political structure, you're trying the impossible.
And actually, that raises a very important point, is that I think we as a nation should actually take a lot of credit for where we are on the GST, and hopefully it'll get done. Right. Because as you said, it's very messy politically, right? And yet there's something quite unique about this GST. First, it's been bipartisan. It was started under the first NDA regime. I think then the next UPA regimes, they shepherded this through. Right. And now this government has, brought it to the brink.
So it's gone through different governments.
Yeah, different governments. And it's all been, thought about, designed, crafted across the spectrum, right. One. And second, I think it's a fantastic example of cooperative federalism, because here, you have the center and 29 states, 2 union territories. They all come together and say, let's do this together. And to actually, to kind of, the way I think about it is that, in a sense, all these people are coming together and they're not giving up their sovereignty, but they're pooling sovereignty for a larger cause that is India. And
which is what we need and really worth fighting for.
Exactly.
But so to actually buttress all that you're saying and to understand it, I don't think too many people are experts on this. Just let's have a look at what's the big deal about GST? What are the main factors? Will prices go up or down when GST comes in? That's what we all want to know. And will the economy improve? Let's have a look at the main points. Well, the first point is that there's no cascading of tax on tax. All taxes, center or state, almost all taxes, center or state, goods or services, and that's a huge thing, can be set off. So if you're paying 10% tax and then you charge 10% tax, you don't charge 10% on 10%, and then the consumer has to pay tax on tax. So no cascading of tax on tax. That's the first kind of technical point. The second point that we're talking about is there'll be less corruption. Now that is what every Indian wants, because there's a mechanism of self-policing, as there's an incentive for every producer, seller to get vouchers. At the moment, to avoid getting vouchers helps you pay less tax. If you want to pay less tax in the GST system, you have to get vouchers. So it's going to reduce corruption. Let's have a look at the third point. And we're going to go into these in each one in some detail, because this is about the total extent of my knowledge, Arvind Subramanian. So you'll have to explain these a bit. It makes India one common market. That's something you were referring to just now. Things are going to be faster to process. Not only that, our trucks are going to go across borders faster. There will be other bottlenecks but octroi will go. So those long, embarrassing queues we see at every state border will be reduced. It's a smoother system and simpler to understand than the myriad of taxes that we have right now. It makes India more competitive versus imports. And that's a very important issue I want to discuss, because we are losing out right now and we need to understand why this is. Makes India more competitive versus other countries. It's a boost to India's growth rate. It'll give us a higher growth rate. Somebody mentioned it's going to increase our growth rate by 2%. I think that's a bit much to forecast. But for example, investment will go up, because under GST, capital goods tax can also be set off. So people will invest more because they get a set off against the machines they buy. How do all these come together in increasing or reducing prices? But first of all, just very quickly, let's dwell too much detail on the no cascading of taxes. How does that help?
Yeah, I think, as you said very simply, that what happens is that if I produce something, I buy inputs. Inputs have taxes. You pay taxes on the inputs. Right. So when I get it, I add value to it, right. And then the taxes on my output. Right. But then my output already has taxes in the form of the inputs that I buy. So when I pay tax, it's a tax on what I produce, right. And also on the tax on the inputs that have gone into my production. Right. So that's what cascading is.
It's just senseless to have a tax on a tax.
Yeah, and then what it does, as you said, is adds the final, it adds the cost to the consumer at right. the end of the chain. Right. So what this is saying is that amount, which what is the taxes that are paid on inputs, right. You will not pay any tax on that, and that's kind of flushed out of the system.
So that really does simplify that. If I'm going to pay tax, I'm going to pay tax on what I've produced, not on what somebody else has produced, and tax I've already paid on it.
Exactly.
Now, is there going to be one tax rate, one GST?
So the way, these are all decisions that the GST Council will have to make.
Right.
But
you kind of talk about three slabs.
Three
right?
slabs.
What are they?
So essentially that, for example, some commodities are thought to be consumed by poorer people, thought to be socially very valuable and important.
Like say medicine or something.
Like say medicine, for example. Right. That will face a lower tax.
Okay.
So we've recommended in our report that lower tax should be state and center combined 12%.
12%.
Yeah, 6 plus 6, 12%.
So that's the lowest.
The lowest.
What your recommendation is?
Yeah. The second tax, which is what is applied to most goods, is called the standard rate. And what we've recommended is that should be somewhere around 17, a little bit 17 or 17 plus.
17%.
17 to 18 is what I prefer.
17 to 18. And this is the standard, which is about 65% of all goods and services?
Will be paid. Right. Now, the important thing is that, when you say, is it the same, there are many, many sames. One is it the same between goods and services? And the answer is yes. It has to be
huge. Yes.
So, and that's very important. Right. So then you don't have to define what's a good, what's a service.
Right.
It's all one rate and it just goes. Right. That's very important. Yes, very important. The other thing is whether the same rate has to apply at the center and the states.
Yes.
That's not necessarily the case, because it's at the moment the states get more revenue from these GST taxes than the center does. Right. So it's possible that the center will have to tax a slightly higher rate than the center.
The state will have to
may have to charge.
So they have a top-up tax, is it?
No. This is just the same. Like when we say 17% for the standard rate, it could be 8 by the center and 9 by the states.
Okay.
Okay. But that 9 for the states, it will be the same for goods and services. Right. That 8 for the center will be the same for goods and services.
Okay. Yeah. And then there is a top up on.
Yeah, there's a third rate for what we call luxury goods,
Okay.
And that I want to emphasize is that rate is.
Don't you call them sin goods, like?
Yeah, we call them demerit goods. Sin is getting a bit judgmental.
Sin is a bit judgmental. I saw certain things that.
That are
Nimbu pani is in it, I think.
I do.
Scottish Nimbu pani.
Exactly, Scottish Nimbu pani. So I think we call them demerit goods, and there the rate
like tobacco and stuff like that.
Tobacco,
cigarettes.
Tobacco, some cigarettes, but also luxury cars and things like that. Right. But there, I must emphasize that whatever we're saying the rate there is exactly what the current. We're not increasing those in any amount relative to the status quo.
So 3 rates. One is goods which are for the poor or have like medicines as well,
clothing,
or food
exactly,
items.
Because remember that just to complicate matters, there are also goods on which there will be no tax.
Right.
They're called exempted goods, like really like foodstuffs, for example, which really the poor consume.
Yes.
Exactly. Yeah.
So that's about 12%. The standard rate 17 to 18, which is 65% of the goods, and then these horrible demerit, sinful goods, which are like alcohol and cigarettes and.
Alcohol is outside the scope of the GST.
So that's right. Yeah. That's a state subject, right?
Exactly.
The real sinful stuff is for the states. Okay. Exactly. And petrol.
See, on petroleum, the arrangement is that under the current understanding is that it will eventually become part of the GST, but in the initial stages, it's not constitutionally kept out of the GST. It's going to be in, and at some stage, center and states can get together and say, now we bring it into the GST.
So it will come into the GST when there's agreement on it. Yeah. Why isn't it right now? A bit disappointing that.
Well, that's all. These are political, issues, and I think compromises that were made. Some states think that they get a lot of money out of this, so they want it to be outside.
So if you've got petroleum in your state, then forget the central, forget the government. I want my taxes from that petrol.
Well, I think, but everyone makes sacrifices, and so everyone gets something in return. So I think one should see this as a political bargain that that's acceptable to everyone.
Okay, so that's the cascading effect and the simplification and the ease of doing business based on the GST versus what the number of taxes we have right now. What about the second point that we raised, less corruption? That this is a self-policing, as there's incentive to get vouchers and declare stuff.
Yeah.
That seems to me very important.
Powerful, very, very powerful. I think you're absolutely right. I think the reason why world over we went into the value-added tax was perhaps this fantastic design feature. You mentioned cascading, but in this, that if you don't want to pay the tax on tax, that means you have to get documentation from the guy who you bought it from, right? Saying, and that guy says, that guy says, I paid these taxes. Then you can show that you've got this bill which had the taxes, and you can say, so I won't pay the tax on tax. So there is an incentive, as you said very nicely earlier, if you don't want to pay the tax on tax, to ask the guy behind you in the value-added chain to actually produce the documentation. Then he in turn has, and this is not just theoretical. There's a very, very nice piece of academic work done on Chile, where they actually found that this really does have a very big impact on compliance. That, the fact that so in a sense, if everyone knows this is happening, everyone knows that he'll be asked for this documentation. So then you have to maintain this documentation.
Right.
And so evasion becomes less, and corruption becomes less.
That really is a huge thing, to voluntarily ask for a bit of documentation because it helps you.
Exactly.
At the moment, it harms you.
Exactly.
Would that happen even at a shopkeeper level, that when they are selling the good, they can also set off so they won't avoid giving you a bill, etc.?
Yeah, at the final stage, of course, it's a little bit different because you're selling it to the consumer. Right. So the consumer cannot ask for anything, but certainly at every stage, every guy who sells it,
so and all the way up to that,
up to that level, yeah.
Okay. Now let's go on to the third key point of that GST is going to kind of benefit us with. It makes India one common market. Now, by that we mean things are going to be faster, they're going to be simpler, they're going to be smoother. How?
Yeah, so I think, the way we phrase it in the report, and it's something that I do want everyone to start using this phrase, the GST can help make in India by making one India. We want to create one India from this. And
so you make in India by making one India.
Yeah.
Because if you have many Indias, it's tough to actually handle it, and it's a disincentive.
And the way, let me say, give a couple of examples of how that happens. One is that, for example, now there is a tax when you sell from one state to another. Okay? So if, say, Gujarat produces something and it sells it to another state, there's an extra tax on that. Right. Now think about it from the point of view. Say you're in Tamil Nadu, right? And this inputs and outputs come from different states and come to your state. It pays all these taxes. So someone buying this good in Tamil Nadu will have these extra taxes. If you have to buy this good from Gujarat, there will be 3, 4, 5% more tax, which puts it at disadvantage compared to buying it from outside.
From Singapore or
Singapore,
Malaysia
exactly.
or anywhere.
So that's the sense in which, by creating one market, you say, well, then it's as cheap for in Tamil Nadu to buy it from Gujarat as it is from Tamil Nadu itself. Right. That means it's cheaper to buy it from there than it is to buy from somewhere else.
Plus the complexities of having different rates, different things. You can't set them off, and there's all kinds of state taxes and.
So that's which leads to the other point is that when goods cross borders in India, there are all these check posts and and part of those relate to complying with taxes.
Yes. And have you paid the tax? Let me see your documentation and the estimate, corruption as well. Actually,
exactly, the corruption. There's one estimate that something like 20% of the delays that take place across borders are due to having to pay taxes. So if we can clean that up, we get this big benefit. Now remember, this seems like a slightly technical point to make, but you have to remember this, that in India, many more goods go by road than by rail. Many more, but twice as much.
Unlike other countries. So where rail is the main way.
Rail, exactly.
But we've underinvested in rail.
Exactly, and we discussed this in the economic survey. Right. But because of that, therefore, if you have more regulatory delays related to taxes and more your connectivity within India is further undermined and compromised because of this, and especially because we do so much by roads.
It makes such a huge difference.
And it make a big
I think
difference.
In America, things move 3 or 4 times faster on road than in India because of so many halts at every border, etc.
In fact, there are some estimates that say that the time and the costs of crossing state borders within India is like 6 to 7 times more than in other countries which are more efficient. So maybe we won't eliminate all that differential, but some good chunk of that. Yeah, exactly. Yeah.
I find that a huge thing to see these rows and lines of trucks at borders is so depressing in one country, one market. Let's have a look at the next 2 points. You actually covered the next point already, which is makes India more competitive versus other countries. And you mentioned that going from state to state, taxes keep going up, and when you get straight from another country, you don't pay that much. But finally, boost to India's growth rate.
Yeah.
How is that going to happen? Is that really going to happen with this?
I think, as you said, number of people have calculated the impact of the VAT on growth rates. We haven't done any, serious analysis on that. But one piece of information that did strike us, which we mentioned in the report, was something that you mentioned, that, growth depends upon more investment, right? Investment basically means, capital goods. When firms buy capital goods, that's what investment is. That gives. Now, the beauty about this GST VAT system is that part of the reduced taxes, what you can set off your taxes against, is the taxes that you pay on your purchases of capital goods, right? Now, under the current system too, you can get some set off on that. But when you go to the GST, you can get a huge set off on that. So effectively, it's like making the price of capital goods cheaper when you get the GST.
Because when you buy machines, you can get a set off on the tax that you pay on those machines.
Exactly.
So another thing which I don't know if you mentioned in the report, I haven't read every single page, but for the young Indian economy where startups are important, e-commerce is important, this seems like a dream for them. They're going to have one tax for the whole country. They don't have to keep worrying because there's so much logistics involved in e-commerce.
Yeah.
So this could be a great help for boosting our whole e-commerce area.
Yeah, I think the whole simplification, uniformity,
not only e-commerce, everybody
everyone.
Benefit.
But, it's a point that we didn't mention. When you asked how many rates are going to be, and I said, 2 or 3, you have to compare that with the current system.
Right.
At the center, we levy 8 rates on taxes, and in addition, we levy cesses and other kinds of tax. So, not to underestimate the simplification that's going to take place as well on this.
I think that is a huge boost to the economy. So, the elephant in the room, Chief Economic Advisor, are we going to pay more or less? Are prices going to go up or down?
Luckily,
Don't avoid it by giving me a economist's
not
answer.
at all. No, not at all. See,
don't say all depends.
No, not even all depends. Remember, the task for our committee was to come up with what is the revenue neutral rate. Right. And by definition...
Revenue neutral for governments.
Yeah. Right. And by definition, it's revenue neutral if on average prices don't go up, because after all, it's the extra price that leads to the tax. Right. So, in principle, revenue neutrality, by definition, if you've got the numbers right, means that prices should not go up. Taxes should not go up. Right. Okay? But it's possible that even though on average prices don't go up, there may be some shifts in, some goods can go up and other goods can come down and so on. Right. So we've done actually some very detailed analysis in the report on this.
Right.
It turns out, for example, that in the CPI, almost...
That's the consumer price index.
Consumer basket, sorry. Consumer basket. About 50 to 55% of goods even today are exempt from taxes, and that will continue into the GST.
To be exempt.
Yes, so it'll be exempt. So most goods, and so what we calculate is that virtually no increase in taxes, no major increases in taxes on nearly all items. It's possible for many items it will come down. It's possible that for a very few items it will go up marginally, but any increase will be very small.
So revenue neutral means, the GST being revenue neutral means that prices will not go up.
Exactly.
Right?
And that's very important.
If I can push you a little further, if there are any efficiencies as a result, because things are simplified, can prices come down and still be revenue neutral?
Yeah, in fact, I mean, think about it this way, that in fact this is something we do calculate. We say that, for example, there will be some substantial compliance efficiency gains, i.e. that is that, when taxes come down, you get better compliance, and that helps bring down overall rates, and if that happens, you can also get some downward pressure as well.
So the good chances prices or inflation may come down.
Yeah. Well, at least it's safe to say that there shouldn't be any serious price impact at all.
Right. Well, thank you very much. I think you're embarking on a terrifically tough exercise, but it's worth it.
Oh, it's more than worth it, because just want to end on this, Prannoy. I think if you're running out of time, think of it this way from the point of view of the overall reforms that the country needs and the government is embarking upon. A big part of investor complaints about India has been the tax system. Right.
Right.
Now, In the next budget, we've kind of committed to bringing corporate taxes down. We're bringing exemptions down as well. Exemptions are a big source of, again,
Yes.
discretion and so on.
Right.
So on the corporate taxes, we're doing that. Now, with the GST on the indirect taxes also, we're kind of cleaning up the system.
Right.
So it's possible that, when the dust settles, we really have a simple, cleaner overall tax system, which has to be good for the economy.
Right. Thank you very much indeed. I've understood much more than in all the readings I've done. This was very clear. Thanks very much. And let's hope GST does come in. Set aside your differences. Sit in Parliament for 5 minutes, pass the GST, and maybe we'll head towards a more corruption-free and a more advanced Indian economy. Thanks for watching. Bye.